So there's two things that I really like to spend all of my time with these days. It's looking for blockchain technology that can be commercialized in the financial space and drinking wine. And a couple of years ago, I was at a Bitcoin event. I know it was kind of not so much a meetup, but a conference similar to this. And I came across this company called Augur, and they had this wine opener. It's a double hinge wine opener, and anybody who drinks too much wine knows that this is the absolute best wine bottle opener you can get. So I was like, I don't know what the hell Augur is, but I love this wine opener. And so some of the gentlemen that are the founders of that are here today, and we're going to be talking about their work more so in the investment space. But with that said, I'm going to first invite Lloyd up, who is another good friend of mine. I'm supposed to keep it simple. In addition to being a good friend and a mentor of mine, Lloyd runs a company called Bose Capital, and they make accounting simple. And he can tell you more about exactly how they do that.
Awesome. So excited for this panel. Real simple on what we do. We build artificial intelligence solutions to automate accounting. It's a regulated industry that's boring and manual, so we want to automate it. As simple as that. Let's get the panelists up here. Huge round of applause for these guys. Awesome. So the panel, ICO versus VC. Brett told me you two are the best guys on the planet to speak on the topic. So I'm stoked.
Well, we've done both.
Awesome. So before we jump into the questions, why don't each of you take a minute or two to introduce yourselves and also talk about, you said you've done both, so your experience in the space.
Sure. My background in the space is mostly on the side of Ethereum. So we started a project called Augur. It's a platform for creating prediction markets. Basically, the idea is if you want to create a financial market on anything, you can do it on Augur, and the fees are really, really, really cheap. And then I also CIO at Pantera Capital, where we have three funds. One's a venture fund investing in equity, one's a fund that invests only in ICOs, and then one's a quant fund that actively trades the top 40 cryptocurrencies.
Yeah, that's Joey, by the way. My name's Jeremy Gardner. Before Augur, I helped co-found the Blockchain Education Network, which is a global network of blockchain and Bitcoin clubs around the world. That's actually how I met Joey. Then we dropped out of school, founded Augur together along with a small team, created one of the very first utility tokens ever, and it was one of the first applications ever built on top of Ethereum. I then went and joined Blockchain Capital, where we actually created the first security token and did an ICO for that as well. And I also founded Distributed Magazine. Oh, and now I have my own hybrid venture hedge fund called Awesome Ventures.
And we have one more. Pavel is here to join us.
You want to grab the chair? We got a chair.
So Pavel, just a quick intro about yourself and your involvement in the space.
Yes, I run a traditional venture fund. I feel confused saying traditional when it comes to artificial intelligence and self-driving cars and the rest of the stuff. It's about 150 million now. We are new to crypto space. We started less than a year ago. We started with our portfolio company Store during an ICO at our location because we have an ex-church as an office in San Francisco, so we use it as an event venue. And they did ICO there, and we looked into this and decided it's time for us to join. So we have our own index fund. We're doing large ICOs. We did tens of millions with Telegram, these kinds of projects, and now just learning and getting excited and learning as we go.
Fantastic. So let's take the first questions with you. First question with you. What are the pros and cons of doing an ICO over traditional route for entrepreneurs?
To be short, it's liquidity, obviously. Liquidity is a double-ended sword, right? So from one side, it allows, it's very good for investors because we can come in and go out at any moment of time, which, previously with our LPs, we had to say, you need to put money for 7 years, forget about them, and maybe we return you something back in 7 years. Now we can reduce this period to just a few months, which is a great benefit. But at the same time, it also puts a lot of responsibility on the founder in terms of what they do with the money, and the market price will indicate how investors believe in them. But I would say, if I need to point just one benefit of ICO comparing to traditional venture funding, is the liquidity of what can they achieve. And probably the second one, just very quickly, is the ability to separate the assets, the property of the company to the cash flow. So you can tokenize the cash flow one way or another without touching the assets of the business. And this is something which didn't exist in the market for never. And now suddenly you can technically separate those two things.
Same question, pros and cons of ICOs over traditional.
There are a lot of pros, but there are a lot of cons. There's the liquidity premium, of course. One of the biggest features for me is the democratization of investment into historically inaccessible vehicles for your average consumer, or even just accredited investors. The whole idea of tokenization enables the entire world to become a stock market and historically illiquid assets to become investable. So very exciting. But on the other hand, when you do an ICO, it's very similar to an IPO in that you're having thousands of people often around the world, sometimes just in the United States, invest in your product at a very early stage. And the trauma that ends up inducing on teams cannot be understated, and it's very underappreciated because this new fundraising mechanism is so novel. But when you do an ICO, you now have thousands of people that feel like you're accountable to them. And you're trying to get a product to market, which is already extraordinarily stressful, and yet people are hounding at your door asking when the product's going to launch, when the price is going to go up, when Coinbase is going to list your token. And that is incredibly stressful, and it's a sort of undue stress that very few startups are prepared for.
Yourself, Joey?
Yeah, I would say, there are different tools for different uses. So if you're distributing like a consensus mechanism, you don't want to sell it to 5 VCs who now own your entire network. If Vitalik had raised money from Google Ventures and Sequoia and Andreessen Horowitz, and that was the staking pool for Ethereum, Ethereum would not be Ethereum, it would just be a centralized network, not different from, say, Ripple. But if you're actually trying to sell something that's distributed in a peer-to-peer fashion, it makes sense to auction it off to a bunch of people as opposed to selling it to a handful of, say, VC firms. But on the flip side, if you're doing something that doesn't require that, or doesn't really need a token in the first place, it makes much more sense to just raise equity. So I'd say they're both kind of two different ways of fundraising, and you should use them differently whenever which one's more appropriate for your company.
I'll push back though, because I think the advent of security tokens opens up an entirely new paradigm for ICOs. If you look at what the tokenization of real estate or intellectual property or artist royalties can do for different segments of the economy that hasn't previously been possible, you can see where tokenization, maybe not an ICO per se, but the distribution of tokens representing real world value can be a very powerful tool. So it's more than just distributed consensus systems in my view, but the vast majority of utility tokens that exist, especially since Augur, are garbage and don't need to exist on the planet. And most of those tokens, in fact, should be security tokens. But I think there is a large place in the global economy for tokenized assets that are secure.
Well, securities tokens are just equity. They just happen to be much more liquid than most forms of equity, which are typically, there's so much money locked up in private equity these days, and they give you an opportunity to make it more liquid.
Fantastic. So let's stay on that topic because it seems to the general public that it's very easy to do an ICO and raise lots of money, which is not the case. But what kind of companies are best suited to go the ICO route? Let's start with Joey.
Yeah, so it basically depends on, one, if you benefit from having a global liquidity pool buying into what you're basically raising money for, if you want a global audience, or whether it makes sense to have kind of a regional, very specific audience. If it's the second type, an ICO doesn't make any sense. Also, it matters like whether you want a specific quality from the people who are buying in. So whether you want like a certain specific value add, in that case, it's probably best to target that specific group or fund or whatever, versus if you're really just kind of more interested in just raising capital. Basically ICOs or crowdfunding more generally are good ways to do that, especially because they open up the market to much more liquidity than you would otherwise have access to. There's a lot of things that VCs on Sand Hill Road can't or won't fund. Historically, the options have basically been you can try to get funding and probably fail at it, or if you're a biotech, you can raise money from the public markets. But there's a lot of stuff in between that just kind of gets left out that I think kind of more democratized access to funding would help resolve those issues.
ICOs are a phenomenal way to bootstrap network effects. It solves this chicken and egg problem when you have a new software application that requires network effects, but getting people to buy in, being the first person into a network isn't very useful, or even the second or third or 10th. I mean, it's Metcalfe's law. Every new participant in a network grows the network exponentially, and thus what you do by tokenizing access to network is incentivizing people financially to participate early on to the kind of pyramid-like nature of any sort of token economics. And I think that is a very powerful concept that's been rampantly abused by most of these utility tokens. Companies, are saying, oh, we need, this helps us build a network effect and acquire users. Then you look at something like basic attention token and they sell to 5 people. Which is a perfect example of a token that you wanted widely distributed. So, I think there are upsides and downsides to the sort of companies that can use this, and some fall in both buckets. But the vast majority, as Joey said originally, you really wanted, the best tokens are ones that require, that help bootstrap a distributed consensus system. So my favorite are like protocol tokens, like Filecoin or Ethereum, where you're really helping give value to a network very early on and incentivize miners or validators in the network to come participate.
Definitely. One follow-up question on that. So earlier you said 90% of the utility tokens are garbage.
99.5.
Why is that?
Because if you look at how most of these are designed, they're literally just created as payment tokens. It's the same as making everyone that goes into Walmart or McDonald's to buy a gift card before they make a purchase. It's stupid. It's like people want to use their credit cards, and if you have a software that people can use their credit cards with, why aren't you letting them use it? You're just going to have a competitor that's going to come along and not make you go buy Bitcoin on Coinbase, send that Bitcoin to Poloniex, buy your shitty altcoin, and then send it to your application and then use it. I mean, it just doesn't make sense right now. And thus, we, with Augur, we kind of opened Pandora's box. We said, oh, this is an application coin, which evolved into the term utility coin, and then utility ended up just meaning a way to pay for a software that doesn't actually need a token. And that's what almost every token is. There are a handful of exceptions, and a lot of them are in like governance, and no governance token requires a 30 million or 100 million or 200 million dollar market cap, which a lot of these have. So a lot of these, I'd say the vast majority of these tokens are going the way of the dinosaurs.
Great. Yes. Same question.
Yeah, I'm a big believer in crowd wisdom, right? So from one side, we only invest in protocol projects, right? Pick those who have real potential economics behind them. But at the same time, I think we need more of ICOs, and anybody who can raise money in a fair way should do so. just because it helps the market to develop and gain expertise that we're lacking. The whole venture business, our industry, used to be and still is like a very small closed club. Like less than 3,000 people, mostly white middle-aged men in Patagonia vests, and they control at least 85% of all of the market. And they have to make a decision for all of the diverse groups of people around the world, which is not right. So the ICO is the chance to change this. And even though most of those companies will fail, this is completely okay for the venture business. In our business, if you do one good deal a year, you're already considered a legend. If you manage to have 2 successful deals in your career lifetime, you come into the Hall of Fame of Silicon Valley. So normally, at least 90% of all the deals I would invest in would fail, which is completely fine because one deal would compensate for the rest. So my hunt is more to find that one deal, not to make sure that every investment returns the capital. Relying on what the crowd is saying is a good way to learn rather than spend resources of my analysts. I can see what's happening on the market and say, do I follow the logic of the crowd here or not?
Perfect.
Well, I disagree just because almost no tokens today are actually getting used, and market capitalization and purchases of tokens are more reflections of high school popularity contests than actual market adoption of new technology. And until we actually see a correlation between the market cap of tokens or the adoption of tokens and the adoption of the underlying technology that they represent value for, I think it's not actually a very good form of crowd wisdom. I mean, look at Augur. I mean, look, we're sitting on
Well,
stage.
it's just the evolution of the market. Now it's in high school. Next year it's going to be at the university, and now it's...
Yeah. But you know where most of the cool kids from my high school are? Still in the town my high school's in. It's not a good reflection of future success. So I think it's more a reflection of the immaturity of this market. And I'll point to Augur, which Joey and I helped co-found. And the fact is that Augur reached $1 billion market cap, and the software hadn't even gone live yet. That is crazy. That doesn't make sense, and it just shows the immaturity and irrationality of the market that we're operating in today. And so, and there's just no world, even as a founder of one of these projects, I could ever rationalize $1 billion market cap on this platform that we talked about.
I'm not sure it's just the immaturity of the market, though. I think it's also related to the fact that investors are searching so much for yield in such a low interest rate environment. You see the same thing among very educated VCs. You look at Magic Leap, also hasn't launched a product. Last round they raised at a $6.5 billion valuation. I think the market for all financial derivatives is much larger than what Magic Leap's targeting. So I think there's not just the fact that the market's nascent, but also that there's this huge search for yield. And if you're looking for yield, the best place to find that is in the most volatile asset class. And so that's why you see this kind of huge influx of capital. And then in terms of the market not valuing things appropriately, still the vast majority of the value in the space, market cap-wise, is in Bitcoin and Ether, which I think is probably relatively rational. Whether the individual capitalizations are accurate or not, I'm not sure. But I think the market has done a decent job of weighting things, relative to kind of impact in the space so far. That doesn't mean there's not individual assets that are way out of line, but I think it's not as bad as it seems at a first glance. There's somebody who published a kind of paper about how a bunch of ICOs have failed and the market's basically priced them down to zero, but nobody talks about that because it's talking about market rationality. Versus everyone's talking about the stuff that's in the top 100 that's way overpriced. A nice example of the market starting to become more rational is if you look at the price chart of Dentacoin.
The price weighting in the market is much more rational than the market capitalizations, and I think everything Joey said is.
I'm just saying that the same is happening with the venture business. I mean, it's not the ideal market, but venture business is the same kind of zoo, but also very closed zoo. This is at least an open zoo. So if something happens, everybody knows about this. In venture business, you fail miserably, you just put it under the carpet and nobody notices.
Yeah, but my only issue with that is that I don't care if venture capitalists and their ultra wealthy LPs lose money. More pension funds do, sure. But what I don't like is the fact that you have a lot of consumers coming into this market that are undereducated and pouring more money than they can afford to lose on crypto investments that they know nothing about, because they're getting sold by snake oil salesmen that this is going to be the next Ethereum. That's deeply troubling to me, and I'd like to see that somewhat get reined in. Although we have seen the market correct and scare a lot of people out.
Fantastic. So with that in mind, I'm seeing a lot of not early stage, rather first-time entrepreneurs, folks with no experience launching these ICOs. Now, from a VC perspective, does that send a signaling risk? Is this really a good company? Is it worthwhile? Because they weren't able to raise money the traditional route, so nobody really believed in them, and now they've gone and launched this ICO. What's your take?
Most of those founders I wouldn't support, frankly speaking. It's obviously a good indication, like doing a crowdfunding campaign would be a good indication that the product is needed. The same is here. Doing a successful ICO would send a very strong signal to investors that it's worth considering. But there's also this initial hype, and in many cases, we as investors would prefer to wait and see if the founders can actually deliver on the promise, at least to a certain extent, and come with the product. So investors care about the team and the product, right? And the team can prove their capability by doing an ICO, but it's not a proof of the product yet. So I think now the dynamics is changing. So probably by the end of this year, the market will be more stable and civilized in terms of the correlation between the professional expertise of the founder and the amount of funding they can raise. Last year there was no correlation on that.
If you draw similarities, Pebble was one of the most successful crowdfunding campaign, but didn't succeed as a company. So what's your take on that?
My rule for crypto tokens, as it generally is for startups, with some exception, is that it has to be 10x better than whatever it's trying to replace. There are certain exceptions like Augur, where there wasn't really a global prediction market platform, and so we didn't actually face too much incumbency. But for the vast majority of crypto tokens, they are going up against an already centralized business. And for the most part, centralized businesses are better, or at least the same, than a decentralized business or software. And so for me to want to invest in a token, it really has to provide an experience that is 10 times better than what currently exists in the market. And if you think about startups and startups that have already tried building a centralized product, and now we're trying to build a decentralized product, and weren't able to raise money from VCs, that to me is a signal that, it's just the biggest red flag. There's no other way to put it. It's very rare that a business that didn't work in a centralized manner is suddenly going to work better in a decentralized manner.
So keeping on that theme here, what sort of frameworks you guys use to determine what's a good opportunity in the space versus not?
One is whether the tech makes sense. A lot of people are doing things here that are kind of akin to someone saying, hey, I'm going to solve cold fusion. Sometimes there's like literally impossibility proofs for what people are trying to do. So those are kind of easy ways to pass on a deal. And then also look at whether the economics make sense, because cryptocurrencies are the first time where computer science and econ have really combined. And so you can't just get the tech right, you also have to get the economic incentive side right. If you look at like Algorand, it's an example of a really great project. Professor behind it, Silvio Macaulay's brilliant, it's a Turing Award winner. Yet the last paragraph of the paper says, we haven't solved the incentive problems yet. This is probably something to look into. And it's like, yeah, that's something you should definitely look into. because incentives are almost as important or just as important as the tech side in this space. And then the last part's everything you look at in any investment, the team, market, how far along is the product, things like that.
I'd take it a step further and say incentives are everything. You can have great technology, but if the incentives don't work in your crypto economic, token economic system, the technology won't actually work because it can't be maintained by the token that should underlie it. So economics come before tech to me. If you figure out a very novel incentive system for technology that you haven't fully figured out, okay, maybe not cold fusion, but a lot of tech I figure you can iterate and get to the point where the tech actually works as long as the baseline incentives for getting there already are functioning. So to me, the incentives and the economics almost come first. But you obviously have to know the problem that you're trying to solve. And going back to my last point, you have to actually have a solution to a problem that is made better by decentralization.
We come from a different angle. So we believe that incentives and the economics overall is very important, but there's a number of existing models that you can apply. It's a limited number of models. All of them are known. The bottleneck for us is the actual product. I mean, we're product guys. We come from the product background. We always look at the product first. That's the main and in many cases the only thing we need to get excited about. If we're excited about the product, we assume that the rest will follow because it's the most difficult part. I mean, in many cases, of course, you need to make sure the economic works. So there are certain models that raised a lot of funding that I personally just don't believe in, like incentivizing users for watching advertising. It never worked on the web, it never worked on mobile, it will never work on blockchain. But who knows? It's still worth. I still respect people trying to do this. Maybe they will make a breakthrough. So we probably wouldn't invest in the economic model that we don't believe in. But if we see a great product, even without the complete economics and incentive model, we can make a bet on that still.
Fantastic. So let's open it up to a couple of audience questions and wrap it up from there.
My name's Dean. I really appreciate all of your perspective.
I appreciate your perspective on the market. To be honest, given your backgrounds, I wasn't expecting you guys to be so honest about how you assess, the current state of the crypto markets. But it's really refreshing. My question to you is, given that you have so many shitcoins that are still trading at unreasonably high market caps, what do you think will be the sort of potential catalysts or triggers that will force the market to pull capital out of those projects and then reallocate to the dozen or so projects that are really worthy of it?
Yeah, I think I don't think there will be a specific catalyst or any one event or anything like that. I think those projects over time, every time a sell-off happens, when people buy back, they'll just buy back less and less of those projects and buy back more and more of the good projects as the market starts to get more intelligent and as investors start to do more due diligence. I don't think there's going to be like some catalyst event where people are like, oh wow, Denver coin makes 0 cents. Let's all sell it. You see that once in a while, right? With like BitConnect, where it was like an actual Ponzi scheme. So it basically went to like $1. But ignoring kind of really clear indicators like that, usually you just kind of see a slow sell-off over time.
Yeah, I think it's going to be more like traditional venture capital, where just individual companies or projects just fail, they run out of money and run away. The enthusiasm around the token diminishes. I wish there was a massive bloodbath in the market. That would just be great for me as an investor, because then we can kind of start fresh, have the good tokens out there. They're actually priced reasonably. And we got that a little bit in the past few months. But for these projects to go to zero, it's going to take time, and I don't think there's going to be one specific catalyst. If it was going to happen, it probably would have happened in this most recent sell-off. And so, given that, I think we're just going to have to wait. But I think projects are going to go to zero sooner, faster than later.
I'm actually more positive on this. I'm now testing an assumption. I'm not saying this is going to be like that, but I'm testing the assumption. I had the same question. The assumption is this, that we see a lot of corporations coming from the other side, right? And these corporations have huge audience. Let's say Walmart is coming to you saying, we want a loyalty program on a token for our client base. Walmart is never going to do an ICO, right? They're never going to launch their blockchain. So they need to partner with somebody. And they say, we are scared to do it. Why don't you go out, find somebody, make a deal. We will test it. And if everything is well, then we'll buy it. And there are hundreds of corporations out there with billions of value that are willing to put on the blockchain. And then we go out and we ask, and it turns out that 95% of those companies not even ready to accept Walmart as a client, right? They say, oh, we have enough money for the next 2 years, we're going to be busy building our features, don't touch us, right? And when we say, well, there's a client, there's a business, they say, well, we're still ahead of our competition anyway, so you're not going to find anybody better than us. Wait. I believe that this can be a trigger for those, even let's take a shitty coin who's moving fast, and they make a deal with Walmarts of the world, and they bring value into that audience, and then they tune their token to fit the right profile of the client. Having one client like Walmart will bring this blockchain from a shitty position to like the top 20. And I think that the winners will be not those who raised more money, but those who will adopt those use cases quicker. And as we've just seen this first use case today, and you can see how it developed with the Pornhub. So this is exactly the case, and you will see more of those, and by the end of the year, you will see completely new leaders emerging from those who understand how important this use case is.
So you talked about
Hold up, Rob.
the market. Wait for the mic.
Let me get a quick question in before you. Thanks, the guys, for the discussions. My question is for you, Jeremy. You mentioned about current industries that are centralized, old world, how they might be better than a distributed blockchain application, for instance.
Usually.
Where do you see those kind of companies actually just buying the blockchain companies, the applications that are being built because they don't want it to be go out of business and distributed?
So MindGeek, which is the largest adult entertainment company in the world, is a great example. Well, not a great example of what you just asked, but an example of where there's an incumbent company, they don't want to do an ICO, they want a privacy token, they go adopt one that's not super well capitalized so they can raise some money from it, see some upside. Good example with Verge. But the idea of many large corporations going and buying a ton of a cryptocurrency on the market in these highly illiquid markets is just like hard for me to fathom.
Not the crypto, the applications that are being built to make crypto.
Oh yeah, I mean we're going to see adoption, but that's not really correlated to ICOs. You know, you don't need a token for most things.
Right.
Like dirty secret in this industry. You don't like most blockchain applications do not need their own token. It can work perfectly fine with Bitcoin or Ethereum or EOS or Cardano, whatever you want. And thus, you're going to see the adoption of blockchain technology across every sector, whether it's real estate, healthcare, government, identity, supply chains, banking. I mean, blockchain technology is permeating across every single industry today. But you're going to see the adoption of pre-existing blockchains, such as Ethereum and ones that are really established protocols. You're not going to see the adoption of these stupid tokens or like really peripheral protocols for the most part.
Couple more questions.
Hey Joey, my question's for you. You see a project, you like the incentives, the idea makes sense. Do you think about scaling? And when you do, like, how do you think about it? Some context being like, how long do you expect the project to be before it can actually scale up to something where 100,000 people use it, something like that? I don't know. It's open-ended.
Yeah, I think scaling is one of the biggest challenges that the space faces right now. And I think anyone building anything on Ethereum, except for applications that require, so like, think of it from an end user standpoint. If it's an application where I may do like one transaction a month, so think something like Airbnb, or maybe even more infrequent. Maybe I rent an Airbnb every 6 months. Those are sorts of things that you can basically for sure do today. Anything beyond that that requires me to transact multiple times a day is basically a bet on the fact that these underlying blockchains will scale, and also a bet on that transaction throughput will increase and that fees per transaction will drop a lot in the future. And I think having enough scalability to kind of not worry about it is probably still like 5 years away. Kind of in an optimistic scenario, and 10 years away in a kind of pessimistic scenario. And I think people talk a lot about like state channels, but for a lot of interesting financial applications, they don't work because you have to lock up so much collateral. And then I think stuff like Plasma is interesting, but again, it's a few years away.
As Wences Cesares of Zappa once said, in 1995, we wanted to upload videos to the web, and we just had to be patient.
I have a question for you, Jeremy. You've said a couple of times now that the token isn't necessary for most of these things. For technologies that propose a fully decentralized network of something where there are consumers and producers in the network, how do those work how do they become fully decentralized without their own token, in your mind?
I mean, can you give me an example? And we can talk through that example.
0x protocol. If it is truly to become a
0x is
protocol,
one of the few tokens I like. So, I've got like 5 ERC20 tokens. I like 0x.
All right.
Happens to be one of them. But for the most part, whether you're talking about identity, you're talking about supply chains, you're talking about finance, most things can be done with an Ethereum a smart contract eventually to have a fully decentralized system. I mean, look, we could have made Augur be fully 95% decentralized in terms of the betting applications, the prediction making application, contract making applications. The only thing that we needed a token for, which has made it a token necessary, was having a distributed consensus network with no central point of failure. That's just very, very rare in most token economic systems that I've seen, where if you remove the token, you actually remove a point of decentralization. Almost every other token I've seen can be replaced by Bitcoin or Ether.
One last question.
I'm curious what you guys think about the syndicate groups. Obviously, they're a real player in the ICO space right now, and a lot of the market share or the market caps that have been had is because these syndicate groups are buying up big chunks of ICOs. I'm part of a couple of them. I'm part of the Gambit group. Joey, I know you do Open Token, and they have partnerships going. So I'm curious what you guys think the future of syndicate groups and how they're going to shape the ICO space over the next year or two is.
Yeah, I mean, I think we saw these kind of syndicate groups start to spring up because as ICOs went more and more private-facing and basically kind of less and less democratic, you basically need some sort of collective bargaining, otherwise you can't get in the deal if you're an individual investor. So that's why we've seen a lot of kind of syndicates spring up, whether it's people like Facebook, Google, Apple, whatever, they all have syndicates to those companies, or whether it's just someone who's your friend and you start it and you kind of build a community around that. And then the project you mentioned, Open Token, is a platform. It's kind of like AngelList, but for syndicates to get into crypto deals. I think that's something we'll see more of going forward, especially because if you look at securities tokens, you're going to have to invest through a syndicate because these projects aren't going to want to deal with a ton of investors versus they can deal with one, and it's like one item and very easy.
Yeah, I mean, I don't like what they do to these ICOs, which is drive up how much money they're raising. I think it's a systemic risk to the industry in the short term until we kind of figure out how to moderate expectations and just limit how much teams raise. Because right now, teams are raising way too much money. And a lot of it has to do with the fact that these syndicates are getting these massive allocations, and then they're reselling them on the market. I mean, Telegram, this was just atrocious, where you saw 3x markups in the private market, and then Telegram itself did that as well. And so, I mean, it's a problem in the industry because it's creating artificial demand for tokens, and you don't want that. But as Joey said, because these sales are going private, it's hard to get access syndicates make a ton of sense in the current regulatory environment.
I think syndicates is a great thing. Finally, there is a good competition to big venture funds, right? And before you had the crowd and then the big funds, and now you have something in between. And this something has a lot of power. And in case of Telegram and a few others, I think we'll see more of this when the issuer is actually offloading all of his risks related to dealing with individual investors onto those syndicates, actually stimulating those syndicates to become stronger and gain their own power. So, I think this is going to be the biggest power on the market, maybe in a year or just a few months.
I hope that's true, but in my experience, it's just growing the group of investors into these ICOs from a bunch of middle-aged white dudes in Patagonia jackets to a bunch of white dudes in button-down T-shirts and Patagonia jackets. It's not actually democratizing finance in the way that ICOs were intended to. And so until I actually see a shift in who's participating in these syndicates, I can't be that thrilled about their existence.
All right, with that, let's give it up for this awesome panel.